What should you do? How should you strategize in this given uncertain environment? We have Sachin Shah, who's a fund manager at MK Investment Managers, joining us on the show. Very good afternoon to you, Sachin. Thank you so much for joining us on ET Now. And the first question being, what should one do? How should one actually gauge this sort of an event and actually prepare? We were preparing, right? For the last 2 months, we knew we are going to get a reciprocal tariff. April 2nd was the date that we all were watching out for, April 3rd for India. But the point being that this tariff is hit us hard. It was much more than we had expected.
Yeah, hi. Thank you so much for having me on your show. Yeah, you're right. I think this is an event which we have been discussing for a while now, and now that it has happened. But I think we also have to be cognizant of the fact that is this sustainable? Something what we need to really think through this, because this is definitely going to impact the U.S. economy the most, and which is also reflected in the U.S. Capital markets clearly for the last few weeks, and more so in the last couple of days. So I think because this is going to be very very inflationary for that economy, and clearly this is it looks at this point in time it looks like it may not be very very sustainable. This is more of a knee jerk kind of challenge that we are seeing, and hopefully there will be more sanity that will prevail in the weeks to come. Nevertheless, let's assume that the worst case that this the current scenario probably prevails. In that case, I think it again boils down to what kind of value proposition that each of our businesses that are dealing with the US counterparties, what is the kind of offering that they have. So, whether it's today, again, yesterday we were all feeling good, at least as far as the pharma sector is concerned, and today again there is news on the pharma sector also coming under the tariffs. But I think we have to be very, we need to keep our heads on the shoulder at this juncture and ask ourselves that uh, do pharma companies, whether it's generics, whether it's formulation generics, whether it's APIs, or whether it's the CRAMS businesses, do they have really enough amount of room to pass on this cost, and take it on in their balance sheets or in their P&Ls? So I think the answers will be very clear over there. The kind of the ROCs that the formulation generic companies are making today, I don't think they have too much of room in terms of taking a significant hit from here on. And even if you think from the APIs or the CRAMS business, I think they are generally 1 to 5% of the overall selling price of these drugs in the US. So I don't see too much of a challenge over there. And I think similarly for some of the other sectors also we will have to evaluate. But yeah, at this point in time, obviously the sentiment has been hit. It's more about that rather than because even if you think from the auto and auto ancillary perspective, I think effective it's going to be sometime in May. So there is some time before that one would hope that there is going to be some reversal of action. So and of course, then the other way to look at it is that at least as far as the domestic economy is concerned, India has a lot of businesses which are fairly insulated from some of these global challenges. So some of the portfolios will have to be aligned to that also.
Right, Sachin, hi, good afternoon. This is Ankita also joining in. Sachin, let's look at a couple of things that are playing out now. The fact that India has been an underperforming its global peers for the last few months in the market drawdown. India has underperformed. Now the dollar index has cooled off and the oil has also come down. So it is a good macro situation in that sense, and also we are hoping for a better earnings season. Despite that, given the looming threat of the tariffs, and it will have a massive inflationary effect world over, it is likely to disrupt the supply chains as well. How long is India going to remain insulated from all of this? We can't remain decoupled for a very long time, despite having a ripe environment now for Indian markets to move up.
Yeah, I completely agree with you. This decoupling story, hasn't really worked most of the times, I would say, because, all said and done, the capital flows are very interlinked from one region to another region. And the sentiments also are very much moving in the same direction most of the time across the region. So those are the challenges when it comes to the the capital market movements, whether it's India, whether it's US, whether it's some of the other emerging markets or developed countries. So it's all fairly interlinked in that sense. But I think the important way to look at it is that market valuations are going to get very reasonable, and if we can identify businesses, solid businesses over which will do pretty decent over the next 2, 3, 4 years, I think this may be a very interesting time for guys who are sitting on the fences and trying to get into the markets at very reasonable valuations. So I think that's the big positive the way we look at it, because there are quite a few businesses which probably are going to be very solid over a period of time because their value propositions are very strong, irrespective of they being domestic businesses or export businesses. I will not be even worried with some of those export businesses because the value proposition is strong, and if the customer audience can really appreciate the value that they bring to the table, I think at some point in time they will get their fair share of market share.
Right. Sachin, let me ask you this question then, because given the fact that the way how the market construct has changed over the last 2 weeks, right? After the correction, we saw a recovery and then we outperformed global peers when you talk about the recovery. We were then talking about sectors that we can bet on, given the fact that the valuations were reasonable. Banks are the one that was stood out. Consensus view was banks is the space that you need to park your money in. We've now entered a new financial year. You have the budget SOPs that will kick in. You will also have the interest rate cuts, that transition will happen, and hopefully now we have the next MPC meeting right next week is where we may likely see some sort of easing maybe on that particular front as well. So how does FY26, at least the first half of the second half of the FY26 look to you, given the fact that you will have all of these little perks actually come to play, which means that consumption will be now a sector that you can actually comfortably bet on, because you have to look at domestic oriented sectors now?
Sure. So yeah, clearly, private sector banking is something what even we favor at this point in time. In fact, we've been favoring it for a while now, and because of 2, 3 reasons. One is that the valuations over there have become very, very reasonable for a while now. That's one. Second, lot of actions by RBI over the last 2 months, and because of that, I think the liquidity has been easing out quite significantly, and those actions will have even further positive, I would say, repercussions over the next few quarters. So, which will also help the discretionary consumption in the domestic markets to do much better. Third is, of course, the rural market economy clearly seems to be having a decent amount of rebound, and there are very, very visible signs as far as the green shoots are concerned out over there. So yes, you're right. In a way, a lot of this domestic focused businesses clearly will have to be a decent allocation in each of these portfolios for FY26. At the same time, I would say that selectively some of these export-oriented businesses, where you believe that the value proposition is very strong. In fact, even in this tariffs, we can see that India has been relatively much better because our tariffs are lower than some of the other countries which we are competing with in the global markets for our goods that we supply to the global alternates to global supply chains. So I think again there we will have some advantage. It's just a question of, I think, right now there is a lot of knee-jerk reactions. So I think these are times when there will always be too much of noise. Let all of this settle down in a week or two, and then it will be easy to identify some very good businesses at very reasonable valuations.
All right, Sachin, thank you so much for taking the time out on our show and joining us today. We will let you go on that note.
If you like this video, then like, share and subscribe to ET Now.